Hi, today in our Financial Accounting, Chapter 1, Uses of Accounting Information and Financial Statements, we will be discussing Objective Number 2. Objective Number 2 will identify the many users of our accounting information in society today. As we discussed in Section 1, accounting plays a role in assisting decision makers by helping to measure, process, and communicate accounting information. This can be then divided into two main categories of accounting information. Managerial accounting or management accounting. This is internal information used by internal decision makers. It provides managers and employees within an organization with information regarding how they have done in the past and what they can expect in the future. It helps them those people within the organization determine if they have met the goals of profitability and liquidity. Generally speaking, managers within the organization use budget reports or operational reports along with any types of ratios relating to those reports to help them determine how they've performed. The second category of accounting information is financial accounting. Financial accounting is the accounting that we end up seeing, most of us. It's the external information used by external decision makers as it relates to a business. It can be broken down into direct and indirect. Direct decision makers would be those types of people or businesses that are directly affected by the accounting information of a particular business. In general, we're thinking of creditors and investors, those people that lend money to a business organization and those people that invest money in the business organization. Just like us, when we're looking at our stock market game, we're looking at the financial information of businesses. We would be investors. And then secondly, indirect decision makers. Those people that have financial interests in a business, but they're not directly impacted. So those entities such as taxing authorities, customers of the business, labor unions, they're all concerned with how that business is performing financially because, for instance, employees, they're worried about whether or not they're going to have a job in the future, if the company is going to be able to pay their wages. The Securities and Exchange Commission is worried to make sure that the business reports their financial information according to the law. Taxing authorities, they're obviously worried about getting their tax revenue, and if a business is not performing well, they may not be able to pay the taxing authorities the amounts of money that they expect and want to receive. And how the information is provided to us is through financial statements, and we will discuss those later in this chapter. This chart provides a nice pictorial example of the users of accounting information. We see that the decision makers is the main category, and then that's broken down into those that are managerial users on the left in the yellow box, those people within the organization. And then on the right-hand side, we see the two different types of financial users of information, those with direct interests and those with indirect interests. So, how do accountants get all of this information to the end users? In today's world, they use management information systems, basically just computerized processing of the data. These computer systems facilitate the gathering, organizing, reporting, and communicating of accounting and financial information. MIS systems provide a way or a system for managing the flow of data to all parts of a business and any interested outside parties. MIS consists of a variety of different interconnected subsystems. The Accounting Information System itself, otherwise known as AIS, is the most important subsystem. We need to look at what is the difference between accounting versus bookkeeping. Accounting includes the actual design of the information system that meets a user's needs. Accounting itself is a goals-driven analysis, interpretation, and use of the information. So accounting is the overriding concept, if you will, or process, the bigger picture. And then bookkeeping is the actual mechanical piece. It's the repetitive process of recording transactions and keeping those financial records. Bookkeeping is really just a small component of accounting. It's a very important component. It's the day-to-day functions that many entry-level accountants perform. But the bigger picture is the actual process of designing how the information should be set up to meet the needs of all of its users. So what about accounting for governmental and not-for-profit organizations? Well, these entities also have a responsibility for reporting accounting information. They have slight differences in how they go about their reporting processes, but it's important that these entities, just like for-profit businesses, establish good, sound accounting practices. These businesses represent 30% of the U.S. economy. They must also report business information for users for both internal and external purposes. And while many of the accounting rules are the same for these types of entities, there are a variety of differences in how these entities report their financial information. We will learn about some of those rules in later chapters. Our concluding question for this chapter, or this objective, is: which decision makers use accounting information and how do they use it? And that concludes our materials for Objective 2 of Chapter 1, Using Accounting Information and Financial Statements.
Please complete the Objective 2 review questions and then submit your responses. Thank you.